All right, we're back with video 3 of 3. We'll hit service now. Good trend, probably too good for normal investors to chase. Okay, you remember how I showed you earlier, I forgot what stock, A, GM, A, consolidation zone, B, C, right? It went from point A to point B, consolidated for months, and then broke out of the consolidation. Usually that stent is as big as this one. So eyeball, this hit a target. Let's see if we can look left and see. Ooh, wow. Okay, this one might be shortable. So not because we're into highs. Okay, I'm going to add this to my watch list. This one, if there's no earnings coming, there are no earnings. I think a credit call spread is in order. Oh boy. Okay, so here's what I say. Oh my gosh, I hate this. So this is, there is a dip coming from here or not, I don't know. So if you have guts, you can short for 2 arrows, 1 arrow and then in the second one with a stop. And based on your guts, the harmonics, this red thing says you shouldn't stop out even if it goes to 692. So you have a $40 stop. Not too many people have that kind of stomach, but it's doable. The only way I would do this is through a credit call spread up here and a debit put spread. So the credit call spread would be saying, okay, you can run as much as you want. I don't know if we can get one above 700. Maybe I'll look into it and then marry it with a credit put spread, debit put spread to capture this drop. And I would give that a month. No earnings for 73 days. So combine these two, that's the least aggressive way to short something like this. It is shortable though. I don't know much about the business. The company is great. I'm shorting the chart. Yeah, the company is great. NVIDIA, no need to review NVIDIA because it's going into earnings. Technically speaking, I think it's easier to fall than to rally. I was right the first time. It came to 390s, pretty close to the 380s. I said it would get there. This NVIDIA stock has to go, in my opinion, down to the 350s at some point. It would have to be a massive disappointment. I don't think it'll come this time around. They can still BS their way through another quarter. The company's income stream is changing drastically, which makes it tricky. I would not short it, to be honest. It will levitate all the boats. So I want it to break out in a huge way because I want the markets to make an all-time high just to give everybody the finger that we're calling us idiots for mentioning all-time highs. And I mean everybody like on Wall Street, all the old school traditional Wall Street people that still think that what applied before the pandemic still applies blindly. Oh, you can't go long the market when it's this many PEs or whatever. This is a different world. So let's see what it does. Maybe dip and then bust out. We'll see. What they deliver in the P&L, it doesn't matter because, what is that, 3 earnings ago in May, the stock reported a shrinkage in sales. So the report wasn't good. The stock rallied 30% after it had already rallied a bunch. Why? Because of what they said. So it's about expectations. But now all the expectations are built in. What kind of statement are they going to come out with? Okay, Oculus. Ocular is Facebook. They're trying to bottom, but they've done that before. So be careful. From a technical perspective, it looks like you're a trader, not an investor. All right, you have a pivot at 242 and 245, and you have buyers below 205. Lose 205, I think you go into ones easy. Path. We traded this one on the long side. I think I sold puts, maybe bought calls, I'm not sure. I would not get long into this peak. Look on the chart. The last time it was here, it was a tough trade. So I would buy the dip. I'm going to take out all these lines. We were correct on it. We charted it well. So I would buy the dip when it comes, where 17.4 or 16.4. Confidently 16.4 coming down, I would sell puts from the 17.4. This up here is just a prior fail zone. So prior fail zone. Need I say more? I mean, you just have to figure it out that it's not an obvious entry point from a trading perspective. Paychecks, who is this? Paycom. I think they shrunk in sales considerably, so you need to pay attention to that. Doesn't look like a disaster. So if you invest in it for the long term, you just got a rewind to the pandemic level. I'm afraid that if it gets into 200 or 220, it's going to be sold hard and come back to this area. So if I'm an investor and I'm adding to current position, I shouldn't. If I'm starting an investment, I should take a partial position and sleep on it for a little bit. It's not a bad thing. Nothing is obviously bad on it, is what I meant to say. Biotechnology, okay. So study the stock. It has no income. So everything in here is based on hope of success. Literally, there's not $1 of income. So if you have a position, don't check the chart. You're in it for the headline. You get the headline out. That's about it. Or follow somebody that knows this biotech inside and out and use their information. Technically speaking, it's not an obvious entry point. Palantir, technically speaking, it's not an obvious entry point. Why? Because that's one of our targets. Look at this. You can't make this stuff up. And you've seen this line here for a long time. This green line as well, which is much, much higher. What do I mean? I mean, I expect Palantir to be a formidable company in the future. That's why we went long on every dip. This here is not an obvious entry point. Why? This is the ledge from which it fell apart. So from here to 23, there should be a lot of sellers waiting. As an investor, I will buy the next dip. Where? I don't know. But this is an excellent company. It's old. It's got good management, regardless of what you read in the news. Oh, he makes too much money. Who cares what he makes if the company is doing well under him or her? This is a him. Plug Power. I wouldn't touch this industry with your money. Listen, look at this. The net income is aggressively getting worse, more at a faster rate than the sales growth. I'm telling you, do your homework. Be realistic. Read naysayers. Like read people who hate this industry and learn why they hate it. Maybe you learn something, a little bit of hesitation. If I'm an investor for the long term, I don't need to worry about the chart. If I'm looking for an entry point, just take partial position and address it later. Leave room to add. If I'm looking to short it, why? And this is a headline stock. The price action is lower lows and lower highs. That's a fact. Qualcomm, I don't think it dipped for a minute. I wouldn't get long into 134. 134 hard sellers, 139 hard sellers, not for me. I'll buy the next dip into 125. Anything below 122 would be interesting to me. Up here, no way on earth. QQQ, no way I would touch this stock. No, I'm kidding. So I will have a full video on this. Somebody asked me about this and the NASDAQ futures. I do futures like 3 times a week, so I'm not going to give it any time here. But I will have the strategy video tonight that should help you on the NQ, and probably some futures videos in the next couple of days as well. This here, look left. This is the summer from July, this July, the summer resistance, big fail, and from last June, 2022. So if I go far enough, I'll hit 2022. So that's the problem. But imagine they take this out. It's a new all-time high. If they take this out, the target, technically speaking, for chart ABC, regardless of what this says, regardless of what the economy is, if they take this, it's a new all-time high. I see a path to a new all-time high. That doesn't mean I load up on calls. Look at all the weakness below. That doesn't happen usually. A whole market gaps up and never looks back. That's just weird. So buy the next dip into 376 for that opportunity. And I will have a lot of that concept of big picture. You should watch the video tonight. RIVN, I'm all in again, like Fisker. It's all in, add all the way down. No, I'm kidding. This company is in trouble, I think. They produce cars, and that's great. They sell I think they sell all their cars, and that's great. They can't stop spending $1 billion a quarter. That is not great. $2 billion last quarter? Holy mackerel. You cannot do this in a rising rate environment. They will need money from their papa, and their papa is not going to give them any more money. That's Amazon. I'm waiting for the headline that Amazon is cutting some ties or reducing its exposure. Anyway, they need to change their spending. I would trade it. I would sell the rally into 18 and 19. I would buy the dip into 14 and 13. ROK. Rockwell. What do they do? Engages, provisions, industrial automation services. Okay. They're selling rallies, so I would not expect the same. I would not expect to change. So this is what happened. This is what happened. This is what happened. Why isn't this what will happen now? Oh, this is the bottom. Okay. So this was the bottom. So was this. I wouldn't start longs here. I think there are sellers into 284. Buy the dip. If you want to be brave, you can buy it at 264 or 5 or 4 in this area. And if you lose that, I think you will get an opportunity to buy it at 244. P&L is stable, so it's just a chart thing. SE went long again, and I got out again. What? You went long SE? That's so stupid. Yes, SE was a pain on the way down. It dipped on earnings. I looked at the earnings. I went long, and I believe I closed the position. I got 40 or 50% of the gains in one day. That was enough for me. I closed it because of what it's done before. I'm going to give you a warning. If SE falls below 35, I think it goes to like 24. I'm estimating the 24. If SE loses this here, I'm going to say GTFO. Get the fudge out, because we don't know where we're going. I don't care how good the P&L is. Shopify. I wouldn't touch it up here. Why? It's a great company. The P&L suddenly flipped green. I don't understand these big fluctuations. They scare me. When you see a legit company go from, $1.7 billion, $1.4 billion loss to a 70.7 billion net income, something big is happening. Maybe it's a good thing. It's a good company, good sales. If you take out these highs, you will probably get to 84, but this would be an exit point for me. If you break out of here, it's going to 85 plus or minus $1 or $2. Buy the next dip would make sense. Silver, I'm out looking for a re-entry. Why did I get out? I took it for a trade. It was more than 50% almost overnight, if not overnight. I can't remember. It was quick. I didn't get out exactly at the top of this candle, but inside the middle of it. So I caught the top. It was definitely around 22 when I got out. I got 55% on my calls. And I would rebuy calls into 21.20 or 21 for this opportunity. But it's too choppy. Look at it. SMCI, which, by the way, silver is doing better than gold on this chart. SMCI, not an obvious entry point. So just if we follow what happened before from here to here, oh, look at that. This scenario is still on, by the way. It just doesn't look right. What? How does this happen? It's just trying to make it wider. What? This is funny. Okay, something like this. So they're going to hit the box, hit resistance. If they don't break out, I think they'll give it back. I think realistically they can get to 270. Really, I don't expect it to go all the way down to 240. It has a lot of support, so I'm not going to put it there. I'm just going to say this. Likely. Tough resistance area. SOUN. Sound Hound. Was that like Spotify or something? Too much spending. Your net loss is bigger than your sales. Technically speaking, above 230, you might get 250 or 260. Buy the dip into 190 as a trading comment. Spotify, speaking of, definitely not an obvious entry point. Just like the markets, they bounced off of multiple sets of moving averages. Buy the dip into 162 with confidence, better confidence into 155 or lower, and you have a huge seller just waiting at 181 and 182. If you take out 181 or 182, you probably go to 205. STM Microelectronics. Good solid P&L. Boring, one would say. Not so boring chart. You fell from one point to another, you consolidated, and then you dropped the rest. Now you're going into a huge consolidation zone. I think 46.50 sellers are strong. I think you'd be better off to buy the dip into 43 than it is to buy here and hope for more upside. If you get out of 48, your path to 52 is easier. Stoneco, people that are asking me this, I sure hope that because you're asking to get out of longs or to try to short it. If you're trying to get long in this chart, you and I need to have a serious conversation. This is the instinct that Wall Street loves because that's who they make money off of. This is what CNBC watchers, most CNBC watchers lose. Because I don't know what they're saying about it. If they're making you feel like this is an entry point, please, let's have a conversation. Buy the dip into 1270. Sorry, 1240 to 12 in this area right here. 1240 to 12. At least don't start here. Start at 1560. You do yourself a better favor. If it goes out of this prior fail, it could get to 1750. But the reward is so slim that I wouldn't even do that. Target. If you fell to the rhetoric on Instagram that the company's in trouble, I tried to convince you otherwise. Hey, I'm all good for conspiracy theory, but look at the P&L. This company is public. There's no shenanigans. You can see what they're making in sales. It's rhetoric. It's nothing that's reality. Now, if you just want long because you feel better about the stock, again, what are we doing here? Why would you go long here when it's just failed out of here miserably and you could have bought it for literally 30% less just a few days ago? Not an obvious entry point. If you love it, to invest in it for the long term, buy the next dip. It could continue to 140, but it will have to do it without me. Because if I'm not long, I'm man enough to admit I missed it. All right, the TLT. If you have greens in the TLT exit, it rarely gives you the opportunity to do well with itself too long. So here's the TLT chart that I was following for everybody. Okay, so, and I pegged it properly. I said, if this is the scenario that's going on, technically the TLT should be in the 50s. America will be a new country. Like, we would have things in America that are not reality right now. And it bounced. So this is the bounce, right? I think if it hits 95, anything above 92 is going to be a hard seller. 92 to 98, they're going to sell it hard. So if I won going long the TLT, I would scalp out. And I hope that scenario doesn't come to fruition, because that means interest rates are so high in America that we won't be able to buy cars. Cars will be like buying cars in other countries. Like you have to save up for like 10 years to buy a car. So it'll be that kind of environment. And credit card rates, oof, I mean, we would have serious, they would break America if they let that happen. I don't think they will. We're going into an election year. They don't have the balls. Okay, so here we go. 248 is a selling zone. It's also a catalyst to get to 270. I don't think it gets there. I think it has to tell us, yes, I'm okay bouncing off of 225 one more time. This bounce was pretty sharp, pretty strong. It covered gaps and whatever. Good job. I think it has one more trip lower. And if I'm going long here, I better be a trader. So let's see what happens this week. A revisit to 18 or break out from 250 and get to 260, 265. Don't oh, by the way, in the live room we traded this. I think I may have shared it as well. Sold the credit put spread once or twice. I definitely shared once. TTD. I wanted to buy this dip when I bought Unity and I shared it, and I just plumbed right out of time. In fact, if you were in the live room on the earnings report after the market closed with me, I said buy shares. I put in an order for shares and it didn't fill. And those who bought shares made a ton of money off of the shares from here to here. It was a huge win. Up here, yes, nice recovery, but I don't have an actionable item. I know there are buyers below, so I would comfortably sell puts to own shares or put spreads. And I know there are harsh sellers above, so I would not buy calls or shares up here. VNQ, Vanguard, real estate. Yeah, I don't want anything to do with real estate. I feel like somebody's lying to me. You know, they thought, oh, real estate, inventory is so tight, so price is going to go through the roof. I don't believe it. If the rates are going to go higher, no one's going to be able to buy anything. So yeah, inventory is tight, prices are high, but there's not going to be money to be made. Nothing's going to move. So technically, this says the same thing. We're going into a selling zone at 82. This stock, regardless of the real estate comment, has sellers waiting between 82 and 83. So if you take out 83, maybe you can challenge 87. If you take out 87, you get to 93. You do have buyers below on this stock, 75 and of course 71. Walmart. Somebody said, you want to get in? It's a huge drop. No, I don't want to get in. It came from a huge level. So I don't know why Walmart is acting like it's NVIDIA. Look at this P&L, boring as hell, right? And it broke out, and this here is just a double test of the neckline. Yes, it could come up back out, but I don't think to make a higher high. I think Walmart's path is to bounce from here if it does bounce, and it's going to find sellers, and it's going to finish this job. I think there's a good chance Walmart be at 145, 146 soon enough. So I think there are sellers here. There's not enough premium for me to sell. ZI, I own shares, and I'm red, and I haven't done anything. The thing fell off a cliff on earnings. I think I'd bought a protective put on a bunch and sold it. But I own shares and I'm red in them, but I haven't done anything. When I posted the trade, I said, this is an investment based on a recommendation from somebody, and it's for the long term, and I'm only taking a partial position. I think I suggested selling a put at 15 or buying shares or buying a call out in time. So the only one that would be hurt is buying the call. I own shares. I'm still in them. I also sold some puts at 17.50, which expired flat-ish. So I also discussed selling a put at 15. The break even of those are below 14, I think, or just around 14. So if I had those, I wouldn't do anything either because the stock price is right here right now. So we'll see if it's going to have a spike. If not, you can exit. I mean, I gave instructions of stop outs. People skim over the instructions. I put instructions, I think, almost every time. If I don't, you should know that if I buy something, I should stop out around 30% or 35%, depends on the scenario. Okay, so here we are. We finished. Just be careful, folks. The market feels a lot better, but nothing better has happened. Okay, it just feels that way. All right, let me stop the recording. Those of you who are at home watching it, get into the room. We had about 50 people today.